Hello, this is Jordan. This video is being recorded on Friday afternoon, September 23rd, 2022. Thank you so much for joining me today for the gold and silver market weekly wrap up. So this week, very rough end of the week post-Fed. Gold finished the week down minus 1.7%. GDX and GDXJ down around 6% or 7% or so, and the S&P 500 was down roughly 5%. So very difficult Friday where we see gold's breakdown really continuing or really confirming, you could say. I mean, the breakdown was confirmed today, the technical breakdown. So we have two daily charts here, and breaking below 1675, I mean, coming into the week, you already had a breakdown if you were looking at daily and weekly closing prices. The question for me is, in this last week or so of the month, could the market negate that and have a reversal and rally, and then the monthly and quarterly charts would look better, or at least you'd be more intrigued if gold was able to close above 1700. Doesn't look like that's going to happen now. You'd really need to see a really strong reversal immediately. And so looking at gold at the top there, look at that, and this plays much better on the daily or weekly line charts, but look at the trend line from the lows of 2021, connecting those up through the first half of 2022. And to me, looking at charts very carefully, that has been or will be a more significant breakdown, already happened, than losing 1675, in my opinion. Now, that breakdown, measuring from the top there in March down to the breakdown point, it depends on what chart you're looking at, whether you're looking at intraday or the weekly close. So you get a lot of different price targets, but the minimum downside target from that breakdown is 1600, and that's something I've been talking about in my premium service for more than a month. As a potential breakdown target, but there's also potential targets in the upper 1500s. And if you're looking at the 50% retracement, that comes in, 1570, 1565, again, depending from what level you measure, closing prices or intraday, that's what you get. So that's going to be the next strong target. I mentioned in my premium update last weekend, gold has about $100 an ounce of downside potential. So we could be seeing that play out. The net spec position, more encouraging. I believe it was around 75,000 contracts in gold. That's 16% of open interest. And that data is as of Tuesday, so I believe gold was trading around 1670. So we'll see how this plays out. But if gold trades down to the 50% retracement, maybe you will see the net spec position pretty close to zero, like it was at the 2016 low, the 2018 low, and probably in 99 or 2000. I don't have that handy right now. But that's something to think about on the sentiment side. So certainly gold, the market is in position where the speculators could liquidate. And silver, silver has this really good setup. 2 weeks ago, we had the net spec position was at its second most bullish reading ever. The speculators were net long. If you look at the short interest in SLV has been extremely high. So you have all these things going for silver. Unfortunately, after today, it looks like it's going to be tough for silver in the very short term to even rally up to 21. That was my hope, that there would be enough power in these in the sentiment data to get silver up to 22, and then that would pull gold higher as well in the short term. That belief has obviously been proven not to be the case, to put it mildly. So does that mean $14 or $15 for silver is back on the table? Maybe. If you look at the bottom, gold-silver ratio might be turning up a little bit. And so we'll see. Sentiment in the stock market is really, really oversold. So at some point here in the next week or two, we could be setting up for a relief rally across the board. But obviously there's a risk of further liquidation over the days ahead. Now, much bigger picture, I think I forgot to say this at the beginning, but it looks like the S&P is now close to 2% below its 40-month moving average. So if the S&P doesn't stage a big rebound next week, it's likely to lose its 40-month moving average. And so all the videos I've been doing for the last 6 months or so, that is a extremely important trigger for a new secular bear market in stocks. That's the S&P losing its 40-month moving average. On the weekly charts, I use the 167-week moving average. But look, never official until you get the monthly close. But it's looking like that's going to happen. And looking at, what happened in the 68 to 70 bear market, 2000, 2002 bear market, gold bottomed roughly a year after gold or gold stocks, a year after the market peaked. That was, close to the time when the Fed cut rates. And so we'll see what happens. I mean, a year would be December. So who knows? Maybe that means, one of those cases was 11 months, I believe. So, we're hearing all this talk that the Fed's not going to pivot. Clearly, if the market keeps trending like this and we don't get a bear market rally really soon, I mean, if we don't get one in the next couple weeks in the S&P, I mean, if you see that drop down to 3,200, the Fed is going to be done hiking. I mean, this is what happens. I mean, in all these cycles, you think that you think they're going to continue to hike in more and more, and then suddenly, the market crashes or bad news starts coming in, and then they're forced to stop. So look for that to happen, I think, in the next month or two. We may have just seen the last Fed hike. I could be wrong. I've been wrong about that for the last several months. But, you can't take that off the table if we see the S&P drop down to 3,200. And then the Fed have, the market forcing them to pivot, basically. That could give you the bear market rally. Oh, the Fed's going to pivot. And then actually when things get worse after that, after you get a rally, that's when the Fed is forced to cut rates. So when the market goes lower again, that's going to force the Fed to cut rates. That's when you have a huge divergence in precious metals. But so that kind of big picture macro talk aside, let's look at the stocks. And I mean, since July, the gold and silver stocks, they've been trying to rally. I mean, they were holding up pretty well until today. I mean, if you're looking at those charts, they weren't necessarily bullish, but I talked about it in my article in real terms. Gold was breaking down. It wasn't confirmed yet in silver or the stocks. The action today clearly is confirming that. I mean, you have new lows across the board, GDX, GDXJ, SIL. And this, to me, I mean, if this continues, I mean, I hate to, give a prediction, but this really could be the final decline in this, correction or bear market, really. And, I'll have, obviously over the weekend, I'll look at the breadth indicators and, all those types of things. I mean, sentiment indicators, those are probably going to blow out to the downside in the coming days, I would think. So, I'm going to have to reassess these charts, but the targets I've been looking at for GDX, I mean, around $20 as major support. GDXJ, I mean, 25, 26, you have major support. There is a gap at 24. So we'll see. I mean, looking at gold, if we go back the gold price, I mean, 1655, that's not that far away from 1570. So what is that? About, $80 or so down to the 50% retracement. I mean, that's what, 5%. So that's not unreasonable to say that the miners could have another 10% downside here. But clearly the trend is down. We're probably going to see some more selling, but the way things are setting up, with the stock market, clearly I think today is the start of things setting in, that we are going to have a recession. There's no soft landing, and that this is going to be a severe bear market. This is not a soft landing, a 28% bear market. If you look at 1968 and that bear market, I believe it was 38%. So, yeah, I mean, there's big picture issues. The selling, obviously, the short-term trend is down, but we're setting up for the start of a new secular bull market in precious metals. So the next 10 years are going to be really, really good. And, I hope we'll have to reassess whether we're going to hit a bottom and that's going to start in the next month or two, or if it's going to take a little bit longer. More on that in my premium update. That's all for today. Let me know your comments below. Tough week. Hope you had an okay week. Hope you have a great weekend. Thanks.